So yeah, welcome everyone. Thanks for joining us for this presentation about the Consult Group Worldwide's fixed income products. That is Oliver Gordon, just popping in now. So let me introduce him. Ollie is the head of global distribution for Consult Group Worldwide. CGW, as they abbreviated, and he's going to take you through. Hi, Ollie. Just doing an introduction, and you popped in. Perfect timing. So he's going to take you through just an overview of what these fixed income products are about. With Chantal, and maybe go into a little bit of how they're structured, so you understand the general structure of the bonds. There's also a couple of other fixed income products. There's a South African pref share, cannabis industry, which maybe we can dip into a little bit. And there's a loan note in the US property real estate industry. But generally, they're bonds with a certain structure, which we'll explain, that makes them very investable. Consult Group Worldwide have been doing this for about 10 years. They're a specialist firm in this medium size bond structuring, and they've done many raises for small to medium sized companies who are looking for alternative ways to raise capital, and so they address that market. So there's an opportunity to I'll get to that at the end, but for anyone who has a network to introduce their network to these products and to earn referral fees from it. But as I said, we'll talk about that a bit more towards the end. So can everyone hear us okay?
I can, thank you.
Yeah, everyone good? Chantal's trying to connect to here. So yeah, I guess without further ado, Ollie, do you want to just give a quick maybe introduction to CGW, and I have some bullet points if you want to speak to those about the structure, how the main points of these bonds, and then also the overall structure. In fact, let me share my screen now, because that could be helpful. So then you can kind of see what the bullet points are. And I've got four of the products here, so we can just dip into fact sheets and PPMs and so on. So maybe start there. Can everyone see the screen all right?
Yeah.
Yeah. Yeah, excellent.
Sure can.
So Ollie, do you want to take it away?
Sure. Well, first of all, nice to speak with you all. I'm not sure where everyone is in the world right now, but it looks like
everyone's in South Africa or Eswatini.
Okay.
Am I correct? Anthony, are you in South Africa?
I'm in Cape Town.
In Cape Town, okay. Yeah, you mentioned load shedding, so that's kind of a giveaway. Although you could be elsewhere in Africa, so that's also possible.
Hence the reason it looks so much sunnier than where I am.
Yes.
I'm in the UK at the moment, guys. Okay, so let me give you a bit of background on Consult Group Worldwide. As Jono mentioned, we're very much in the deal structuring and origination business, and we also distribute our own products. So the audience, our key audience, is very typical in the investment world. Private banks, family offices, wealth managers, asset managers, placement agents, introducing agents. That's very much our client base. Who our products are issued to. Our client base is fairly sector agnostic and fairly global. We raise capital on behalf of typically SMEs. The fundraisers we do are normally between 25 and 100 million, not exclusively, but that's typically the range that we operate within. That area where companies, for some reason, tend to find it harder to get initial lending from from the banking world. We work with companies.
Sorry, no, Ollie, is that dollars?
Well, we work depending on the location of the company. It can be, we work in dollars, pounds, euros, typically.
Okay.
Dollars.
Okay, I was just checking. 25 million to 100 million dollars, or you're referring to?
So the total raise for a single bond is typically between 25 and 100 million in either dollars, euros, pounds. However, I think it's probably important to point out that that's the total raise. So, for example, if your question is more aligned to what is for example, the investment amounts that we look at, for the bonds, they're typically around, the minimum ticket size is typically 100 to 125,000 US dollars, GBP or euro, depending on the bond, which currency we're issuing the bond in. Was that more what you were alluding to?
Yes. No, you've answered for me. Thanks.
Perfect. So sorry, again, the sectors that we currently have bonds structured for include renewable energy, trade finance, real estate bridge finance, real estate, biofuels, energy storage, what else? And mining. Regarding geolocations, we work with companies in the United Kingdom, in the United States, in Australia, in Ireland, in Europe, and I don't know if I'm repeating myself, in America also. I'm very much just talking about the bonds at the moment. Is that all right, Jono?
Yeah, that's fine. We can mention, as I said, there's a South African opportunity as well, which is the preference share. We can get there. Let's talk about the bond structure first, because that's the majority of the products.
Sure. Okay. So our bonds, we reverse engineer how the structure of our bonds, very much based on what our network are looking for, and we apply that boilerplated structure to all of our bonds, regardless of what the sector is or where they are or where the sponsor companies are located. So I'll just run you through those key attributes to all of our bonds. And if anyone has any questions at the end of that, please fire away. All of our bonds are listed, so exchange listed. Exchanges are typically the London Stock Exchange, Frankfurt Stock Exchange, or GEMS Ireland in Dublin. So if we have a sponsor company that is in a sector that typically lists on a certain exchange, then obviously we will look at that. But those are the three main exchanges that we list our bonds on. All of our bonds are investment grade. All of our bonds, so we bring in a rating agency to do a deep dive on the sponsor company and apply a rating to all of our bonds. Our bonds typically get ratings of between B and A. Our bonds are all senior secured, asset backed. The coupons vary. Typically those coupons are between, I would say, 7 and maximum 9%, circa 9% a year. We always structure our bonds to pay as frequently as possible. So in an ideal world, we're looking for quarterly payments, but we also have, biannual payments as well for coupon payments. All of our bonds are 5-year bonds. The bonds are freely transferable, and we utilize what's called a bankruptcy remote structure. And that is one of the reasons actually we get very attractive ratings from the rating agencies. And I'll just quickly explain what I mean by a bankruptcy remote structure. All of our bonds come in the form of a UK PLC. That UK PLC is set up purely to house and administer the capital of the bondholders. So what is the benefit of that? It means that that vehicle is completely separated from the sponsor companies. So God forbid the sponsor companies were to to go bankrupt, or something was to go horribly wrong.
I'm sorry, Ollie. I just I lost you there for a bit. Do you mind going back to that these bankruptcy? So you're breaking off when you started speaking of that fund structure.
Sure, no problem. So all of our bonds are bankruptcy, are in what we call a bankruptcy remote structure. That structure is a UK public limited company.
Can you see I put the structure on the screen. Is it showing for you guys?
No.
Structure of the program.
No, I think you have to scroll down.
Are you still seeing the email? The bullet points?
We can see the bullet points.
Yeah, okay. So what I'm going to do, because I didn't do the screen sharing properly, apologies. So we'll try again, just share my screen, then I can tab between. So let me know if you can see that now, because Ollie, you can speak to this. This is from one of the listing documents for one of the bonds called Properfy, which has the structure quite nicely detailed. Can you see it now?
Yeah,
I can see it. Yeah.
So you can speak to that.
I'd rather not, if you don't mind, Jono, because it's a specific structure for a specific bond. But I think, guys, if my verbal explanation isn't sufficient, please ask questions, and if not, I can possibly refer to this structure, which loosely relates to what I'm telling you. So we set up a UK PLC as in a public limited company, and that public limited company has no assets, no liabilities, and no liens. So it is purely there in this diagram where the arrow is pointed. That is the PLC. The sole purpose of that PLC is to receive the capital of the bondholders. It has no assets, no liabilities. It is purely there to house the bondholder capital. Now the question is, why do we do it like that? Well, the simple answer is it means that the bondholder money is ring-fenced. It does not go to the sponsor companies to do as they wish. And it is also protected from the business activity of the sponsor company. Meaning if the sponsor company was to buy the wrong lottery ticket and everything in that business went wrong, the bondholder capital is protected. Now, that's the first section. You'll notice in this document there is a note trustee, which is to the left of the screen. That refers to a trustee. So we employ a trustee firm who are regulated. Sorry, the bonds are all obviously under English law, and so therefore the trustees that we employ are FCA regulated, which is the Financial Conduct Authority in the United Kingdom, which we think is a fairly robust regulatory body. Now, their job, the trustee's job, is to act in the best interest of the bondholders. Therefore, any capital that is deployed from the bond has to be signed off by the trustee. I think you're probably beginning to realize why this has such a positive effect on the rating agency, on the rating we receive from the rating agency. There is massive oversight by the trustee firm on the spending of the bond. And the trustee has a very, very clear set of guidelines and call it basically a very extensive tick list that the sponsor company has to adhere to before any capital is released to them. That differs from bond to bond based on what the business activity is of the sponsor company.
So if I may just ask there's this now bankruptcy remote structure.
Yeah.
That would sit and actually hold the capital raised from the bondholders. This particular structure is saying that it protects it's protecting the money of the bondholder, and yet you're saying that the trustees sign off on. So if there's a particular drawdowns that need to be made from there. So in other words, it's not 100% fail safe as I understand it. It's just the governance aspect that the rating agents are impressed with, not necessarily that ultimately you don't access those funds, or those funds are not put into use into actual assets.
I'm trying to think how to. Let me reiterate what the purpose of this structure is. If we were to issue a bond and the bond had no separate vehicle to house the bondholder capital, the money would go directly to the sponsor company, i.e. the company that is looking to raise debt to further its business activities.
It's down here on the right. Principal borrow there, see proper fine investment.
Yeah, John, John, I think that might confuse the issue a little bit, to be honest.
Okay.
Sorry, I didn't catch your name. Who is it asking the question? Sorry.
Mufo.
Mufo. Okay, great.
Yeah.
It's a great question, and the point here is, if we give the money directly to the sponsor company and there is no oversight of that, quite frankly, the directors of that company could go and buy a new Learjet if they wanted, and that's not exactly looking after the best interests of the bondholder. I'm joking, obviously, but the whole point of creating a company and that company having title of the bondholder capital and putting a trustee above that company, it's corporate governance and it's oversight of how the money is spent. Does that make sense?
It certainly does. I think it's just I needed to understand the exact positioning of it, because then what happens is we find ourselves, more kind of spinning it as if it's some sort of a fail safe, and
not.
to say that whereas what was saying is, yeah, no, I get you. I get you now. I just wanted to be clear, because it seemed like you were cutting at some point, so I wasn't too sure if I did get everything.
Yeah, I think the key for example, these are asset-backed, senior secured bonds. So that when we talk about what is underpinning the investment, that's a separate topic. All that we have here is oversight of how the money is spent and where the money goes. So I'll give you an example of what we tend to do with our real estate bonds, because I think that's a space that everybody is quite familiar with and has a rudimentary understanding of. So, for example, let's say, for example, we have a real estate company, and that real estate company, we would set up a bond for them. We would set up an SPV in the UK, which would be the PLC company. There would be a trustee sitting above that PLC in the United Kingdom with a very, very clearly defined deed of trust that is issued and signed off on by the sponsor company in advance of any capital being raised. Now, that deed of trust is critical because it determines what the criteria if the sponsor company wants to, for example, buy a building, that building, the trustee has to go to that building with the deed of trust and the security trust and basically make sure that everything that was pre-agreed of the investment strategy, the investment model, the asset, it complies. And then they will sign off on it. And the money at that point doesn't even go to the sponsor company in this instance. It would go to a propco. So so it would go from the, again, I'm sorry if I'm going into a lot of detail here, but the whole point here is corporate oversight and governance. It would go from the bond to a company that would be specifically acquiring that asset. And that company would have a management company overseeing it. If that's confusing, please tell me. But the key point here is that the sponsor company actually, they can distribute the money. They can say when they want to buy an asset, but they do not actually touch the money. And they have to be accountable that the assets that they're investing in meet the predetermined criteria set out in the investment memorandum of the bond. Does that make sense?
It makes sense, and I think I see it working when we're talking about, you know, your international participation, say with NGOs, and when they want to kind of fund certain projects in different countries, and I see how that structure is required. I was just trying to think that, practically speaking, how quickly are things implementable, with that sort of long sort of chain process. It's just something that I'm thinking out loud. It's not anything that we will obviously need to answer here, because I'm assuming that it's working. It's something
maybe
that's
I can come in there quickly. The bonds are already structured, so all of this, what I call heavy lifting, the structuring has been done for these bonds. So it's not a factor of, well, we have to wait until all the structuring is put in place. It's already there, and the bonds are ready to go. Any investor who wants to invest in them can invest immediately. They just need they've got ISA numbers. So what CGW do is they look at this, putting the structure in place, and really preparing this for market, so that the structure's in place. It's part of the whole package of the bond. And that's what they do for their clients. And
if we're buying a stadium or building a stadium, how are they able to actually, practically meet our timelines, and how is their responsiveness? How accurately are they able to say, indeed, someone sitting in Eswatini, or the company that, the sponsor sitting in Eswatini is actually identified something that actually does meet the procurement criteria that was described to them sitting in London. So it's I think for me it's not really here or there. I'm just thinking from a process perspective and a business perspective.
Yeah. Okay. So I mean, there's two issues here. The one is these are there's a number of investment products already ready to go. Like Propify, there's 9 investment products that are ready investable. If you're talking about possibly some clients, then that's obviously a different equation. To put into a structure like this, that is a different conversation entirely. And CGW don't do very much of that. They're very selective as to which clients they choose to structure something like this for. So the purpose of this is really just to show you what's already available, and to see if some of these products might be of interest to your current network of investors.
I think the question, and tell me if I misinterpreted it, but I think what you're asking is, how quickly can capital be deployed into an investment? Is it an arduous process based on what I've just described to you? So is that what you're asking?
Yes, precisely.
Okay, so the simple answer is, from your investor's point of view, is that it's not relevant to them how quickly capital is deployed, because it's a fixed income investment that from the date of investment they receive their coupon payments on a quarterly basis. So how quickly capital, they do not receive income only if, for example, an acquisition goes ahead and then that starts generating income. That's not how these bonds are structured. So I think I understand your point, but it's in relation to your investors receiving their coupon payments in a timely fashion. It's not relevant. But what I will say
No,
to
I think, and I think for this discussion as well, I think for ours it's just to kind of understand the structure. This for me was just kind of a by the way, because practically speaking, as much as our concern would be for the investors, ultimately they ends up being impact with regard to the coupons that investors receive, whereas you maybe find that because of this whole process, people are missing timelines, people aren't able to optimize on their procurement processes and shipping and all of these things, and these sort of costs end up eroding the returns to investors. So for me, I was looking at it from that perspective to say, is it that streamlined that there isn't a direct impact? Because if the company that is doing the drawdown finds that it is impractical, then surely there has to be that sort of friction that is passed on also to the bondholders. But I think for purposes of this meeting, I'm probably derailing the entire team. I think we probably can come back to this one just for clarity. But when we talk about the interest of the investors, definitely I think I see where the governance comes in, and yeah, they were on the same page.
Mifu, I think it's a really valid point you raise. At the end of the day, something that is slow and cumbersome and slows the wheels of commerce down, so to speak, is not beneficial to anyone. So I'm just going to quickly answer that. I think it's important to understand that the deed of trust and the security trust that is given and issued to the trustee is structured well in advance of the bond going live, with the sponsor company, with the trustee and ourselves. So everybody understands what the due process is and is very, very clear. Again, for example, I'll use a real estate company as an example. Obviously they have a pipeline of assets that they've already done due diligence on, etc. And they will then basically bring the package to the trustee. Trustee will basically go through its tick list in the same process that you would imagine, exactly the same with any acquisition that goes on with any in the real estate industry. So it's very much pre-planned, pre-structured, and will move as quickly as is possible, because quite frankly, the sponsor company don't want to dilly-dally. I think it's important to point out as well, Mifu, that the type of companies we're dealing with, I'll give you an example. Our US company, just continuing with the theme of real estate, this is a company that has 1.2 billion in assets in existence in their portfolio. It's a very large private equity group. They're very, we've worked with them for quite a long time, and we're not raising capital on behalf of small companies. Not to put too fine a point in it, the bonds that we structure cost the sponsor companies quite a substantial amount of money. These are liquid, large. I mean, when I say SMEs, please don't think, companies with, turnover of 20, 30 million a year. These are fairly substantial companies.
Okay.
Okay, so moving on, we've covered the exchange list station. We've covered the sectors, we've covered geolocations. In relation to security and assets, guys, all of the, as I said, all of the bonds are asset backed, and depending on the industry, the sponsor company are involved in, typically the assets that were acquired through the bond are the assets that secure and underpin the investment. It's not always the case. Again, we have the company that I've just mentioned as reference, outwith of what they acquire in the bond, they also, as I mentioned, have 1.2 billion in real estate assets, which fluctuates up and down. But the minimum that can fluctuate to is 300 million. Why? The bond is a 200 million bond raise. So that's a little bit more unique. They have assets that are in existence and owned by them, which are also pledged to the bond on top of the assets that are acquired with the bondholder capital. But that's what we mean when we're talking about the bonds being asset backed. And when we say senior secured, again, I think it's important, again, I'll continue using this example. That bond that I've just mentioned on behalf of the US private equity group, when we say it's senior secured, it's because the capital from the bond makes up the mezzanine finance portion of their debt stack. And in the United States, mezzanine finance is senior secured, which is not the case in some other countries, including the country of my location, the United Kingdom. But it's a massive bonus in that case. I'm trying to think if there's any other key points. So the bonds, as I said, are 5 years. They're freely transferable. And as I said, the coupon payments vary between 7 and 9%, depending on the sponsor company. Jono, do you think I've missed anything?
No, I think that was pretty comprehensive in terms of an overall idea of how they're structured. Maybe any questions so far? Make it interactive. Anyone got any?
No, nothing from me at this point.
Okay.
No questions from me, John.
Okay.
Yeah.
I think from my side, Oli, I would like to find out what bond ratings do you normally deal with in terms of
As
these
in
bonds?
what ratings have we achieved, or which agencies?
The ones that you basically choose to work around.
We work with a number of different agencies. We don't tend to work with the big three for a couple of reasons. I would say one of the main ones is the fact that it just doesn't make sense for the size of raises that we're doing. If you're, a Moody's or a Fitch, you're talking, to have a rating done. Typically, they're rating bonds that are $1 billion bonds, and they charge $500,000 for their privilege. So we tend to work with smaller rating agencies that use the same mapping algorithms that the main three use. And typically, actually, those agencies, the owners and the management team are typically ex-employees from the main three. So we deal with, for example, ARC in London. We deal with Spectrum in New York, to name a couple. We deal with Eurobond out of Frankfurt. Those are the three of the agencies that we use on some of our bonds. And the ratings that we achieve, we have a couple of A-rated bonds and a couple of B-rated bonds. Everything's typically between B and A rated. Another reason, guys, that we bring rating agencies in is, these are private companies at the end of the day that we're raising capital on behalf of, and you can appreciate that it makes their life actually a lot easier if we bring a rating agency in to do a deep dive on their finances, on every aspect of their business. The rating agency comes back with a report and a rating, and that's what you can share with your investors. And as we know, the whole purpose here is to streamline the investment due diligence process, and also, you know, there's a level of security there as well for the companies that we're raising capital on behalf of. You know, they're not really that keen. You know, again, the smallest coupon size we offer, I think, is $100,000. You know, it's a bit of an administrative nightmare for them to have to allow every single investor who wants to come in to do a deep dive on their company.
No, thank you, Oli. I'm not sure if my next question is something that you are still going to cover. See, I'm a financial planner here back in South Africa, so I would have wanted to find out if all the gentlemen who are here, who may not be Financial Sector Conduct Authority authorized, but they do have the, you know, the best interest of marketing these bonds, will they be able to be paid even though they are outside of the certification type of environment?
I'm sorry. Are you asking me if we can pay introducers?
No.
Non-certified.
Non-certified where?
But my question would be, how can you be selling this if you're not certified?
Who's not certified?
I'm saying, if I'm understanding what you're being asked, you cannot be selling this product into the South African market unless you have the relevant certification and or qualifications.
Yeah, so I think that's a question that's not just limited to South Africa. I think that's a fairly global perspective. And from our point of view, we're very much solely business to business. If you recall from my my earlier statement, our clients, we are a strictly business to business operator. And we structure the investments. We work closely with the sponsor companies, and the people that distribute our investments are professional investors. At the moment, from our point of view, and I think this is going to change, we're not regulated, and we don't need to be regulated.
Okay, I think that was. I'm now really fully answered.
Okay, sorry, is that what you wanted to know?
I wanted to find out if you are regulated or not.
No, we're not. We don't need to be regulated.
Okay.
In the United Kingdom, we do not need to be regulated. And anywhere, the only country at the moment that we do not, and you'll notice on our investment literature, our products are not suitable for US investors. But so our business model is very simple. We distribute our products to professional investors and investment managers, financial advisors, wealth managers, banks, placement agents, and they sell their products in a regulated environment to the retail client.
Covered. Thank you.
No problem. Any other questions?
Sorry, I just wanted to clarify on the senior secured side. You said all the bonds are senior secured, or were you speaking specifically to the real estate side?
All of our bonds. All of the following characteristics apply to our bonds: exchange listed, senior secured, asset backed, 5-year term, freely transferable, and rated, and utilizing a bankruptcy remote structure.
Yeah.
Ollie, I'm going to have to sign off just now. Would I be able to get information from Jonathan? I think it was.
Yeah.
Yeah, and I can pass it on to you when
I
get the information from Jonathan.
I'm going to have to excuse myself, but Chantel, I'll come through to you then. I have a few queries, but I'd like to just have a chat to you first, and then take it from there. So I'm going to say thank you very much to everybody.
Okay, thank you, Anthony. Hopefully, happy to have a separate call
Yeah,
You and
thanks.
Chantal,
Thanks.
if you'd like to take this further.
Yeah, definitely. We'll set that up with you, Jonathan.
Excellent.
Chantal, I'll give you a shout tomorrow. Thank you so much, everyone.
Okay.
All the best.
Have a nice evening.
Thank you. Thank
Bye.
you. Bye.
Yeah, so I guess any other questions? We could take no other questions. We could take a look at maybe one or two of the products in a bit more detail, if that's of interest to anyone.
I think for me, it's
Definitely.
pretty straightforward, Jono. I mean, you've ticked all the, you've answered all, you've answered all the questions for me. It's literally a bond, pays coupons, obviously capital back after 5 years or easily exchanged, tradable on the various exchanges that you list the bonds on. So, I mean, I think it's pretty straightforward. It just would be obviously the underlying, as you said, the underlying package. So, I mean, I'm sure you can email that to us and so that we can understand that more. But other than that, I think all my questions are answered.
Okay.
It was a very,
By underlying package, you're talking
very
about,
good presentation.
you're talking about commission structure.
The underlying, yeah, and just, yeah, like as you said, the different underlying investments for the bonds. So being the different industries, whether it's mining, sustainable, investments, as mentioned earlier. So that would just be of interest to me. And then, yeah, take it from there. I think this is more suitable from my understanding to be sold through into asset managements that can include them into the unitized solutions. Because we do have South African unit trusts that will then buy into offshore bonds. So you have your income unit trusts that buy into offshore bonds to create the income return overall for the unit trust. And that makes more sense because the tax obviously then is taken care of within the unit trust structure.
Yeah, and as Ollie said, there's no problem with regulation then, because you've been selling them to professional firms.
Yeah, and I mean, most of the professional firms will have a discretionary license. So that, all unit trusts are run on those.
Yeah.
So,
Exactly. So you work under their license.
I think it's very difficult to sell this directly to individuals because unless you have a discretionary license and they sign a discretionary mandate with you, I mean, I think this is more suited for, I would say in my line of work, asset management.
Yeah, absolutely. I mean, at 100,000 minimum US dollars ticket size, that's it's a fairly high net wealth investor. An individual investor who's going to consider that in rand terms, that's 1.5 million rand into one.
Yeah, and then you have to get around the advice if you're giving advice or it's execution only. So that's why it's easier to sell into a unit trust structure ultimately.
Yeah. What I will say is I'm working on a platform. It's actually already up and running, but these bonds are not in there. Hopefully next year they'll have done their due diligence and they will be offering some of these bonds as part of a raise. So it'll be a specific raise done for a bond or bonds, and the minimum investment will be a lot lower because the whole raise will aim to meet at least 100, the minimum ticket size of 100,000. So that might be 20 invested, put in $5,000 each. So we'll probably make it a minimum investment of $1,000. And then in terms of the regulation and so on, they have the applicable licenses to do this. So we then.
And I assume you do that on an execution only basis. So there wouldn't be advice around that.
So they are
the advisors.
They're the advisors, yes. So I'm working under their license. So if it comes down to a client wanting any kind of advice, then I refer them to them. They have a license, and then they give the advice, which is why they're doing the due diligence and so on. So that may be available. I can't say for sure because they've got to go through a process, but I'm hoping first quarter of next year, we might have a platform that's actually set up particularly for Southern African investors who want to invest in international opportunities, that would then have some of these products in them that are like a retail investor could come into that and then invest by that, and it would be a much lower ticket size as well.
Yeah.
So that's the way then you could handle, if you have any individual investors, you could take them through to that platform. But you know, for asset managers and professionals, then there's no problem. You can just talk to them, and you know, this is, you know, it's not regulated, as Holly said. So that's the target for now, I'd say.
I think we might just confirm what license you need. Like if you're a Cat 1 license, then what section of the Cat 1 license that would fall under? Would it just fall under general bonds? So that's just something we have to take into consideration if you're going to open it up to individual financial advisors, to make sure that they are able to give advice and sell it. Or then if you're doing an execution only trade, that there is a trail fee of some sort in the background for the execution only trade. Because I think, yeah, you just got to be careful with that in terms of the phase legislation and our own financial conduct authority as well within South Africa. But yeah, because I mean, it wouldn't make any sense for me as a wealth advisor or financial advisor to send the client to the platform, because how would I make money? So
well,
ultimately,
you'd have an arrangement with me. That's how you make money.
Okay.
Because I have an arrangement with the platform. So so no, don't worry. That, you know, you'll certainly be making money. It's just the platform is a facilitation. It's a way of facilitating an investment.
Get the smaller trades.
Yeah, for a smaller guy who can invest $1,000. You know, you can send him there, and it's all listed, and they've made it, you know, as easy as possible to do. So he has a wallet, and they've got, you know, all of those kinds of things set up. But as I said, it's not available yet. It's hopefully going to come on stream next year. But in the meantime, if you've got asset managers and, you know, institutions that are interested, then, you know, by all means, they can jump in tomorrow if they wanted to. They're all listed, they have ISA numbers. It's a pretty straightforward process to buy these bonds through, you know, brokers. Any bank can do it. So, I mean, what attracted me to this was that these products are ready to go. You don't have to do any structuring, any IMs, any. The other side of my business is corporate finance, trying to do bespoke capital raises for companies, and then you've got what I call heavy lifting. You've got to write documents, got to look at financials, you've got to, you know, make sure the pitch deck is appropriate, etc. And that's all been done, you know, to a high standard with these. So they're ready to go.
I think you know, with corporates, remember, in terms of South African law, a corporate cannot hold direct offshore investments. They would have to hold it by an asset swap in South African law. So that's just something for you probably to consider with the platform, that you want to have an asset swap capability for corporates to hold these bonds, because they can't hold them directly. That's against South African legislation.
What, you mean an asset manager here can't hold a foreign?
No, a South African company. So say you're going to any South African company that wants to invest offshore, they can't, because remember, only individuals have a FIA allowance and a single discretionary allowance. We are corporate. If you want to sell this to a corporate, say I go to Joe Blow down the road, basically, and he's a corporate and he wants to take corporate money, he has to do it via asset swap. A South African company can't hold direct offshore investments.
Right. Okay, that's useful to know.
So just when you're doing the platform, that's something to consider. So you just have to have that asset swap capability with the platform to take the money offshore for trusts and corporates, because obviously family trusts that want to hold offshore investments have to also hold it through an asset swap.
Okay.
But we can chat about that offline.
Yeah, some technicalities like that. In terms of the platform, they structure it through an offshore SPV that's set up for each raise. So if you invest in the bond, you're actually investing in a via that platform. You've been investing in a.
But is the
UK
SPV South African?
No, it's UK. It's a UK SPV.
Yeah, you still need an asset swap for that then. It's unlike a RAND feeder unit trust or a RAND investment where the asset management company takes it offshore. If you're doing it in the direct name, you would need asset swap clearance for that.
Okay, but
you would need
an
a
asset
capability.
manager, if this is their business, they invest in.
That's different because they're putting it through the unit trust. Yeah, that's completely
So
different.
I'd say probably your focus should be on them because they're professionals and they know what they're doing. But I guess if a company comes along and wants to invest by the company, then you'll have to make a plan for them. But
yeah, but we can talk about that
yeah,
offline.
by all means.
But I that's all I needed to hear. So I'm also going to drop off and I'll touch base with you.
Yeah, please. I think you've got some of the information, but I sent you some. I sent you this email, I think, with some of these links. Am I right? You can resend it.
The thing, for some odd reason, it's just come on WhatsApp. It hasn't come through my email, but we can sort that out tomorrow.
Okay.
No problem.
I'll send you an email.
Thank you so much for organizing the presentation.
Yeah, my pleasure. So I'll chat to you soon. Have a chat to Anthony and let me know if you want to do a follow-up call later this week or early
Happy.
next week. Okay.
Happy.
Excellent.
Have a good evening.
Okay.
Cheers. Bye.
Bye-bye. Okay. Any other questions?
No, I think on our end it's clear as day. We'll need to maybe just have a caucus decide in terms of how we can take advantage of it. Initially, there's obviously thoughts running through my mind in terms of how this can benefit us. But yeah, we obviously would still need to, I think, I believe would also have maybe some of the concerns that Chantel also raised around the asset swapping issue. I'm pretty sure our regulation has pretty much just copy and paste from SA.
I mean, I'll just say there that's a very specific instance. That's a company that is not in the investment game. They're not an asset manager. It could be another company that says, yeah, I'd quite like to invest in whatever 100,000 of bonds. That's quite unusual. Generally, you're going to be looking either professional asset management company interested in this, financial advisors. This is what they do, or an individual, high net wealth individual who, as I said, I'm working on a solution via the platform, and I will bring this. When I chat to these guys who are doing the platform, I'll say, well, what about companies? How do you deal with that? Asset swapping, and they probably have thought of a solution because they do this all the time. They structure these deals for individuals. I think mainly individuals, but someone might want to invest via trust or company, so they would certainly have a way. So yeah, I don't see that as a major issue. So I guess you guys in the investment game, if you've got anyone who may be interested in these products, I think the first thing is to get to know them a bit better. What you actually have. There's 9 of them, 9 different products, which you can offer appropriately. So I'm doing some LinkedIn marketing now, and I look at someone's profile, and then I can usually tell, okay, yeah, they might be interested in this one and this one, and then I'll offer them appropriately. So it just depends on, you don't offer it all to everyone. For instance, if they're into ESG investment, then there's two renewable energy bonds that might tick the boxes, so you can offer those. If they're into mining or hydrocarbons, then there's an oil and gas fund. If they're into property, there's three property investment companies and products. So I think if you guys are interested, the next step is to get to know a little bit more about the products. And there's a whole suite of information I can give you access to, so you can go and download information, do some reading, and we can maybe schedule another call to do some training if possible, just to go
Definitely
go through any of the ones. I mean, my approach really is to focus on a few, because there's just 9, it's too much. You can't hit someone with 9 products. So I tend to focus on just a few of them. I've chosen these ones. So there's DCM, which is US multifamily homes. That's an A3 rating. So it's, you know, it's highly rated. It's a good, a very well-established firm. They've got hundreds of millions of dollars of security. You know, it's a nice, it's a very nice secure structure. Proper Finance, a UK property development bridging company, is also a good one in the UK. So 2 bonds there, and then Orange River Capital is not a bond, but it's preference shares in the South African Cannabis Fund, which Ollie likes this one particularly. So I mean, we can talk to this if you want briefly, but it's a really good opportunity, especially if they're local investors, because they could actually go visit. They can then go visit the farm and check it out, and they understand, you know, something about the local market and so on. And there's some capital growth in there as well, potentially. So it's a fixed income with a, you know, capital growth upside. And then this one is a good alternative energy one, biofuel, in the Middle East. So, you know, you could offer, just give people a taste of these 3 or 4 bonds, and then you know, see what they say. If you know someone particularly interested in, say, renewables, then, you know, there's two renewable bonds that you could offer them. Someone's particularly interested in cannabis, you can offer them cannabis, you know, and so on. You know the products a bit better, so that you can.
Jonathan?
Yeah.
May I please ask that you play the video, if possible, for the neutral capital?
Mm-hmm. Play the video. Yeah. Okay, we can do that.
Jono, do you need me? Do you still need me on this call?
I don't know. Has anyone got any more questions for Ollie? Before he goes?
I think we're good on our end.
Okay. Well, maybe we'll set up a follow-up, you know, some training or something. Ollie might be part of that. So we'll let you know, Ollie.
Happy to help, guys. No problem.
Thank you, Ollie.
Oh, is this the video for neutral fuels?
Yes.
You can make as many videos as you
Yeah.
want.
Sorry, let me just skip the ad.
I'll tell you what, I'll hold on the call. That way, if you guys have any questions on neutral
Our
fuels.
carbon footprint and our impact on the communities in which we live and work. When we heard that the UAE government had the same goals and wanted to partner with local companies, we set out to work together to make the UAE a cleaner, happier country. After extensive research and reviewing our recycling processes and ideas from other countries, we asked ourselves, how can we do even better? That's when we met Neutral Fuels, a company which converts used vegetable cooking oil into biodiesel. Could we take used oil from our fryers and use every drop to fuel our delivery trucks? Then we wanted to take advantage of McDonald's existing production and delivery systems to create an environmentally friendly and economical solution. To optimize our carbon footprint savings, we went even further, creating a highly efficient closed-loop system. Don't panic, I can explain what that means. Here's how our closed-loop system works. Firstly, when we deliver food, packaging and other goods to a local McDonald's restaurant, we bring a specially designed recyclable empty oil container, which stores used oil safely and cleanly. When our delivery truck arrives at the restaurant, we swap this empty oil container for the restaurant's full used oil container. We do this at every restaurant on our circuit, and then we deliver the containers full of used vegetable oil to the Neutral Fuels biorefinery, which is conveniently located close to our distribution centre. The used oil containers are then offloaded before the delivery truck is refueled with the pure biodiesel made from previous deliveries. Our used oil is filtered and heated. It is then mixed with methanol and a catalyst called sodium methylate. After about an hour, the catalyst has done its job. The used cooking oil has become raw biodiesel. This mixture is then pumped into a different series of tanks where the different elements are separated and recovered. Finally, The biofuel is pumped into a storage tank, from where it is then dispensed into the McDonald's trucks. 1 litre of McDonald's waste cooking oil produces 1 litre of biodiesel. What we have achieved. McDonald's UAE exclusively uses 100% recycled used cooking oil to fuel its entire fleet of trucks. Over the past 4 years, our trucks have travelled over 5 million kilometres using 100% biodiesel, reducing our carbon footprint by over 4,000 tonnes. This distance is the same as travelling 125 times around the world, or to put it another way, 6.5 times to the moon and back. Our ultimate partnership prize was when the Dubai Road and Transportation Authority, RTA, gave McDonald's UAE and Neutral Fuels jointly the prestigious Dubai Award for Sustainable Transport in the Environmental Protection category. We are proud to say that we are the first food company ever to win the award. We continue to look forward to finding even more ways to reduce our carbon footprint in the Middle East, fulfilling our commitment to discovering other ways we can give back to the community and environment for years to come.
Soaring prices, mass shortages.
Right, let's just stop
What's
this.
next?
So,
Guys, just briefly on neutral fuels, it's probably worth pointing out McDonald's is only one. Can you guys hear me?
yeah, I can hear you. Everyone else still?
Yeah, I can hear you.
Yeah.
It's worth pointing out neutral fuels, their clients include Emirates Airlines, IKEA, Del Monte, obviously McDonald's, and a plethora of other pretty high brand names. Also, please note that this is the second bond that we've raised for neutral fuel for their global expansion. They're expanding into India, the Philippines. You'll notice I'm telling you countries that have serious pollution issues. Malaysia and the United Kingdom, to name a few.
Am I correct?
We've already raised.
I think I saw South Africa on the.
Yes, they're also expanding in South Africa. We've already raised 30 million for them, and we're now raising another 30 million for them. It's a really exciting company. Oh, sorry, and by the way, this company will be listing on a number of stock exchanges in the next 2 years, and this is something we're involved with. So this is not
definitely the future, Oli.
Yeah, it is.
If you answer anything that has to do with global warming.
Yeah, we have another very interesting bond, and actually a loan note for another company that's very interesting called Energy Storage. I don't know if you're aware, but something like, I think it's 75% of all energy produced by humans is wasted. And the company in question is an Australian company whose partners include the Australian government. And basically their patented technology stores at a very low cost 90% of energy that is created via human use at this time. I mean, they're able to solve a problem that directly affects global warming at an industrial scale at a low cost. That's again, you can see. Yeah.
I'm not sure, Oli, if I understood that. It sounded like something out of the Matrix harvesting scene. Or when you say that they're able to store energy that is produced by humans. When you say produced by humans, you mean just our natural
activity.
Yeah. So you're talking about the heat we give off.
If you think all of the energy that's produced by humanity, not by humans, by humanity. So, for example, any energy that is produced, it is not stored. So whether it's wind, whether it's solar, whether it's nuclear, The method,
Mhm.
75% of that energy is wasted. If it's not
Yes.
used immediately, it's wasted.
Yeah.
So there has been an awful lot of attention focused on creating green energy. But the reality of the matter is no thought has been given to how to store energy, whether it's green or otherwise, which is if you think, I mean, I just want to say that number again, 75% is wasted.
Yeah.
So we have, with energy storage as patented technology, it solves the problem on an industrial scale at a very low cost. Yeah, I can send you information if you're interested.
What's the Achilles heel on this neutral? What's it? Neutral fuel? Neutral energy?
Heel?
Yeah.
In what sense?
So in other words, so in other words, for me, it's great when we look at it from a McDonald's perspective. Probably not so great when we look at it like at an airline perspective. Maybe they also are producing, you know, that much oil that they can use, but I'd assume that it works within a particular a market segment as opposed to across the board.
Yeah, it works across the board. It's waste. So, for example, one of their clients in India is the Indian State Oil Company, for example.
Uh-huh.
You know, I think forget about the flashy names, forget about McDonald's, forget about Emirates. That's great from an investor point of view because that's income coming into the business. And those are major contracts that can be scaled on a global basis. But if we talk about what is the business model, we're talking about, and when we say global expansion, let me explain to you exactly what global expansion looks like. You have cities, you have the reason they partnered with McDonald's, for example, is because there is a McDonald's on every street corner. Do you know how much waste McDonald's produces on a yearly basis in the Emirates alone? It's staggering. On a global basis, the amount of waste they lose is staggering. So from an investment point of view, it's great to have that contract because it's a contract that can be rolled out globally across their entire operation. And you'll notice if you look in the literature at Neutral Fuels, there's a strategy there. All of their clients are global behemoths, so which supports their global rollout. What does the global rollout look like? You're talking about city scale biofuel solutions. So what does that mean? It means on the edge of a city, they put up a plant. They have a fleet of vehicles with patented technology that basically takes the waste. Think of it like when they used to deliver you bottles of milk. They take your empty bottle, they give you a full bottle of milk. On every city that they are targeting and that they exist in, they have the plant at the edge of the city, they take the waste and they replace the waste with biofuel. And that biofuel is used instead of petrol, gas, diesel in the vehicles that the business that they're contracted with is utilizing. So that's what it looks like. The Achilles heel.
I like it.
The Achilles heel is humanity, as with all green energy, I'm afraid.
Thank you.
Okay, so it's always, hey.
Sorry?
It's always. I think maybe I'd missed that. I thought it was specifically the cooking oil.
No. Okay. I think you're getting. I think maybe you're thinking that it's they create biodiesel from waste, and that waste is
including veggies, and so it's always and supermarkets I hear in Europe they have huge waste as well because guys they want fresh fruit, you know, and veggies every day, and you know I think I probably missed that. I was thinking of just specifically the oil, and I was saying, is it how sustainable is it outside of a McDonald's model? But no, all waste, it's massive.
It's huge.
It's massive.
Clients include other companies, Nestle, PepsiCo. A lot of those wouldn't necessarily produce volumes of cooking oil, but they've got every company produces waste. So that's an elegant solution. I think they're definitely on.
Really onto a great thing.
Just to let you know, there's not only commission here, but there's also an equity upside. If you refer people, you can get some equity too. They're going to be listed in the next 2 years as well. So
Jonathan, through you, I think I would like to have maybe another meeting with yourself and Oli. Maybe with the Prince Makosami, to just talk a little bit about the bamboo project that we have in Eswatini, which still requires donor funds for the feasibility study. Maybe just to give you a little bit, Oli, I heard you speaking about biofuels and all of that, and then immediately thought of the project that we are taking to the Kingdom of Swaziland to plant bamboo, giant bamboo, over 10,000 hectares of land, through which a number of markets would come out of that. But maybe just as an introduction, I would really like to have that conversation, Jono.
Yeah, I'm not sure we could really be of much assistance. That's the only problem. I mean, as much as I think it's a great project, in terms of getting grant funding, these companies are way beyond that stage. They're all producing. They're in a growth phase, and they want to raise more capital. So CGW have a very strict set of criteria for bringing any new companies on board and helping them to raise capital. And it's not startups; it's companies that already have been in operation for a number of years. They've got at least 100% asset backing for the bonds. You have to have assets. If there's no assets, this model doesn't work. So you probably. I mean, by all means, we can talk about it, but it's a VC cap rate. It's a different. It doesn't.
Hence, I'm saying it's something that could be outside of this. But thank you. I hear you.
Yeah. So we can talk further about that. I did actually ask Walter. I spoke to him and I asked him about that possibility of getting some grant funding, and he said. Not really. The foundation has kind of wound down their activities, and they're only doing a little bit in Angola, but they're not taking on new projects, unfortunately. So that wasn't the case 10 years ago, but I guess things change, and it's obviously COVID has changed a lot. So that's not a channel, but that doesn't mean there's not other funders out there, particularly if it's a green project. If you do some research. There's no doubt you could get grant funding for it. There are institutions that do this kind of thing. Okay. So thank you, guys. Any other questions? Wally or Louis?
No, thanks. I think I'm.
Okay. So I guess have a little chat about it internally, and then let me know where you want to go with it. But I have an agreement in place with Vuyo, so you guys would earn commission on it, and then it's just about learning more about the products and which ones are going to suit you and your network, so that you can offer them intelligently to everyone, because it's really something you need to understand each product in some detail, so that you know what it offers, and then so for instance, I'm contacting people on LinkedIn, and I look at their profile, and then I have to decide, okay, well, what's going to be suitable for them. out of this, and then you know, talk to them accordingly. So you need to just understand the product suite. So I'm very happy to give you access to backend, so you can get all the information, you can read it, and then maybe we can have a call where we just cover any questions that you have. But think about it first, and come back to me. Let me know what you want to do.
Fantastic. No, thank you so
for
much for
Jonah.
Thank you, guys. And Mufo, just let me know if anything happens with the ABSA guy.
okay.
Maybe chase him tonight and
Yeah.
set something up for tomorrow.
I will. I'm just jumping into another call now at 7:30. So probably I'll give you feedback after that at say around 9 p.m.
Okay, no problem.
All the best.
Okay,
All
thank
the
you,
best.
everyone.
Bye.
Thanks. Have a nice
Thank
evening.
you, guys.
Thanks, guys.
We'll chat soon.
Thanks.
All right. Thanks, Ali. Ali's still there. I think you might have dropped off.
Thanks.